Well, good morning, good day, and good evening to all those who have joined this webinar today. And this is ASIC's regtech webinar dealing with responsible lending, and it's a demonstration and a panelist discussion on that topic. I'm Mark Adams. I lead ASIC's Strategic Intelligence area and coordinate ASIC's Innovation Hub. I will facilitate today's session as well as the panel session later on. But before proceeding, I would like to do an acknowledgement of country. And for those outside of Australia, this is an important marking of our traditional owners of the land. And I'd like to start by doing that. So good morning and welcome wherever in the world you may be watching us. I'd like to begin by acknowledging the traditional owners, ongoing connection to and custodianship of the lands on which many of us meet today, and pay my respects to elders past, present, and emerging. And I just want to acknowledge as well that there's many people from around the world joining us today, and we're very pleased that that is the case. So today's event is the last in a series of regtech events that ASIC has conducted over the last 2 financial years, where we've made use of some special purpose funding to promote and illustrate the potential of regtech to support good practices, risk management and compliance within the financial sector. Today, the case study focuses on opportunities in the business of lending to consumers, and my colleagues will speak more about that in due course. The agenda is split into 2. Part A, until about 11 a.m. on the eastern side of Australia, has the scene setting, and then most importantly, the demonstrators presenting, 3 demonstrators presenting the potential of technology towards that outcome I mentioned earlier. There will be some opportunity for question and answers. That will be limited in time, but we will try to see whether we can get a few questions in. Then importantly, I'll have a break for about 10 minutes and then return where ASIC will provide some reflections on those demonstrations and the exercise and the problem-solving event that we did. And then we'll have a panel with 4 members of the industry where we'll actually talk about their experiences to date and where they might see the future being and what kind of issues they may encounter in the applications of technology to support their businesses. So today is really about trying to illustrate the art of the possible and, in fact, the actual. You may get an idea, you may be inspired by something, you may learn some new things. If we achieve that, I think that is the outcome. And really, it's a step along the way of continuing to promote the use of technologies towards those better outcomes for consumers and market operations. But with that, I think we now move into the scene setting and the opening statement of Commissioner Sean Hughes. And so I'll pass over to you, Sean.
Thank you, Mark, and hello to everybody. Greetings from here in Australia to wherever you are joining us today. I want to pay particular thanks and appreciation to our esteemed guests, all of the demonstrators, and indeed every delegate who's joining us and making time to do so. And of course, I also want to acknowledge the traditional owners and custodians of the lands on which we meet here today across all of Australia, and pay my respects to elders past, present, and emerging. Today's showcase and discussion will, we hope, give us a window into the future of regulation. And through that, we hope that compliance can become more streamlined, efficient, and customer-centric, rather than just a red pen on a page. Of course, the credit industry continues to evolve, and while the focus in the current macroeconomic environment is necessarily and primarily addressed on ensuring that credit flows quickly and efficiently to borrowers, customers are also expecting seamless digital interactions and experiences with their lenders. And of course, since the escalation of the COVID-19 pandemic this year, we have seen a rapid acceleration of the pace at which these changes can and are expected to occur. All of us here at ASIC are excited to explore the opportunities which regtech solutions may hold for the credit industry. As you may know, in Australia, the Federal Parliament's intention in passing the responsible lending laws now almost 10 years ago was to underline the industry's commitment to dealing fairly with its customers. Particularly so, and right now in the midst of a pandemic, it matters even more that we ensure that consumers are protected from entering into loans that are not unsuitable, to use the statutory language. ASIC's approach to regtech has always been governed by a set of quite core basic principles. First, striving to work towards outcomes in regtech that align with our strategic priorities of protecting consumers and ensuring economic stability. Second, working within our parameters to better understand innovation without advocating or endorsing any one solution, technology, or business model. And finally, to conduct learning through industry inputs, good domestic and international case studies, as well as our own experiences with engaging with the regtech sector through fora and other events such as this. And while regtech services can help in achieving compliance outcomes, let me be absolutely clear before anyone disconnects their service. This webinar is not and will not be focused on regulation or compliance, so you can all take a breather. Instead, our intent today is to frame this session as a glimpse into how regtech has the potential to improve performance across the lending industry. We think that regtech carries with it the capacity to improve outcomes for a wide cross-section of stakeholders. Last year, and almost for the entirety of the year, ASIC conducted extensive consultation on our regulatory guidance, specifically Reg Guide 209, called Credit Licensing, Responsible Lending and Conduct. Part of our work there to review the guidance was to update it, both so that it is contemporaneous, but also it is well positioned to better reflect and anticipate technological developments. And as part of this exercise, I was personally very impressed to learn from the industry how existing solutions were rapidly transforming the sector. The willingness of industry participants to share their experiences and opportunities for improvements bodes very well for today's discussion here in this moment. From a business perspective, we heard one entity reflect on the scaling opportunities that they tapped into when considering responsible lending standards from the company's very inception. Through early engagement with their legal and compliance teams, this lender was able to integrate responsible practices into the design of their user experience. This type of future-proofing meant that scaling was much easier to manage, processes and procedures were easier to replicate, and any need for adaptation or change manifested themselves as simple adjustments, rather than a wholesale root and branch system overhaul. And closely related to this, ASIC was informed that current aggregation tools have the capacity to rapidly and accurately collect, analyse and contextualise consumer data. In one case, an organisation we spoke to pointed out that analysing consumer household expenditure took between 80 to 90% less time when conducted digitally as opposed to manually. And that same entity was able to fully approve a number of customers' loans and deliver the necessary documentation to their inboxes within just 58 minutes. Now compare this to the 64 days it takes some traditional institutions to approve a similar loan. That's quite an extraordinary difference. When I first heard these stories last year, it was remarkable to think that regulators are often blamed for red tape blockages, when in fact, the capability and capacity to harness and tap into technology to accelerate positive customer outcomes lies within the entities themselves, whether they choose to invest and develop it or not. Whether for compliance reasons or reasons of credit or other risk, obtaining and effectively utilising information about a prospective borrower can sometimes present numerous challenges. And we expect to see even wider spread transformation in this area in coming years, with the consumer data right having first commenced here in Australia on the 1st of July 2020. The initial phase of the CDR allows customers of the 4 major banks to share their banking data from their personal customers' accounts. We do hope that this will provide a springboard for regtechs in particular to bring their ideas to life. Now, we at ASIC acknowledge that these developments will affect the accessibility and costs of obtaining transactional information, as well as building profiles of consumers' financial situations. Industry has voiced similar concerns, weighing them against the opportunity to challenge market conventions, in some cases to reward loyal clients, and in others to provide greater competition through lower, more transparent pricing. Meanwhile, yet other firms are seeking to make broader services more accessible to a broader range of customers, such as refinancing. In ASIC's view, these kinds of services which open banking will make available might also help licensees to streamline their processes, leading to more efficient, sustainable, and positive consumer outcomes and experiences. So to everyone who's dialed into this webinar, and in closing, I'd like to bring the address back to the core tenets of our regtech initiative series. These events were established with a number of principles in mind. First, to raise awareness and understanding of the current state and future potential of regtech. The series helps showcase how technology can assist in the provision of compliance and monitoring services. And finally, these sessions were tailored to identify opportunities and challenges of implementing innovation driven by real need. We continue to select subject matter that simultaneously balances the pursuit of efficiency, good business practices, improved consumer outcomes, and deeper, more effective competition. And it is in combining our knowledge with industry that we can continue to instill best practices into the market and its practices. So to everyone here today, let me say thank you. Thank you to everyone who's contributed to today's discussions and demonstrations, and to you all for your interest and commitment to this time-critical dialogue. All the best for today, and back to you, Mark.
Thank you, Sean. Thank you very much for setting the strategic context for ASIC's interest in regtech and this topic today. So that sets the overall headline picture. Now let's get into the problem that we set for this event. And I'm going to ask Christian Groves, who is a senior manager in our credit, retail banking and payments team, to give a bit of an introduction to the problem that we set for the demonstrators. And this will mean that the demonstrators can focus more on their solution and who they are, rather than going over some common problem material. So over to you, Christian. You're on mute, Christian.
Thank you, Mark, and thank you, Sean, for your opening. Good morning and a warm welcome to everyone tuning in today. My name is Christian Groves and I'm a Senior Manager in the Credit, Retail Banking and Payments team here at ASIC. Today's event focuses on how regtech solutions can be used in the context of responsible lending. We'll very shortly see a series of demonstrators showcasing how the technology can solve the problem statement that has been set for this event, which is to analyse the contents of a consumer loan file to ensure and enhance compliance with responsible lending obligations. ASIC is aware of a range of solutions already available in the market, including solutions which focus on aspects like optical character recognition to ingest data, all the way through to solutions which use predictive models in analysing and assessing information received from consumers. ASIC believes there is scope for innovations in technology to further promote good business practices, improve efficiency, reduce costs, and increase competition. It is important to highlight that the purpose of an event such as this is to explore regtech solutions and other innovations which lenders may wish to adopt in achieving or maintaining best practices and stay within their credit risk set boundaries. In designing this event, ASIC did not set out to prescribe the manner in which licensees should comply with any relevant obligations. We also did not set out to assess the accuracy of solutions against our data set. Rather, we sought to illustrate the capability and potential regtech solutions available in the market. This event comes at an unusual yet appropriate time. During the current COVID-19 pandemic, lenders will be more keen than ever to understand the financial circumstances of prospective borrowers, but have unique challenges in, for example, obtaining physical copies of items such as proof of income. This highlights the benefits of innovation and a move to digital lending processes to ensure continued serviceability of consumer demand for credit. As Sean also mentioned earlier, the Consumer Data Right was launched on the 1st of July this year, which presented us an opportunity to test responsible lending as a potential use case for CDR. In anticipation of this, we designed our dataset for this event to include banking transaction data, which is compliant with the consumer data standards. Moving on to the dataset supplied by ASIC for this event, we provided 20 complete consumer loan files across different credit products, being home loans, unsecured personal loans, and secured car loans. Each consumer loan file contains documents that a credit licensee might compile in the process of making a loan, including a loan application form, file notes, income verification documents such as payslips, expense verification documents such as tenancy agreements, serviceability calculations, and final assessments. We've also included 6 months worth of banking transaction data for each applicant. To test the solutions that will be demonstrated today, we plan to different forms of deficiencies in each consumer loan file. Some documents may be missing or incomplete, and some inconsistent information appears across different documents. We're excited to see the potential of regtech applications in identifying where deficiencies or inconsistencies may be present in a consumer loan file. We're also excited to see technology that can run even more complex analytics across a data set to understand a consumer's profile or behaviour, or indeed any other innovative ideas on how and what kinds of data can be applied to a lending assessment. In order to overcome privacy concerns, we developed the dataset synthetically, meaning that no real personal information or other consumer details were used in development. However, we did include the names of real businesses in the bank transaction data and mapped consumer expenditures to businesses located within each consumer's locality. This was done to facilitate solutions which may wish to analyse and use geographical data in some form. So, what we've provided in this slide are some examples of scenarios we included in our dataset that will be referred to by our demonstrators today. You'll see that the circumstances of each applicant varies quite widely. We've used different age groups, employment status, and number of dependents in an attempt to cover the field of the most common borrower demographics. We recognise that for some applications of technology, such as machine learning, 20 consumer loan files may be quite a limited data set. Where more data is necessary to develop a solution, we've encouraged demonstrators to draw on the other third-party or publicly available data sets in their development and testing processes. We're acutely aware of the potential usefulness and role of alternative or additional data sets in contributing to the assessment process. Before concluding, I'd like to take the opportunity to acknowledge all the submissions that have been made to ASIC for this event. Unfortunately, not all firms had the opportunity to present today due to various limitations, but we do consider their solutions to be valuable contributions. We've therefore made them available for viewing on our bulletin board for this event, which is available on our website. After the demonstrations have concluded, Kim Huen, an acting senior analyst in our credit retail banking and payments team, will give some commentary on ASIC's observations of the regtech solutions presented and generally the current capability and potential of regtech in this space. I'll now hand back to Mark Adams to facilitate the demonstrations, and I thank you all once again for attending this webinar.
Thank you, Christian. Thank you for that summary of the problem that we set and the context of it. And now it's time for the presentations. And as just Christian said, we did have a range of applicants and we had to minimize the numbers. So I'll later on confirm for people where to go on our webpage to find out information about the other entities that put their hand up, and we've got some slides from them so that they can indicate their kind of activity and solutions they make available too. But with that, we go to our three presentations that are here today, and we start with John Lowe, who is the Principal of Skillful Analytics. So I'll pass over to you, John.
Thank you, Mark. Responsible lending has never been more important. Thank you for the opportunity today to present our solution to help improve and enhance compliance with responsible lending obligations. Next slide. So the topics I'll cover off, the challenges with complying, then I'll give a demonstration of our solution and its benefits, and then the application of our solution to 2 loan file cases, and then I'll share some of the considerations that we went through while developing our solution. Some of the challenges, so we're working with high data volume and complex unstructured data. The lending process is complicated and done under a complex regulatory environment. The view of risk is often aggregated, focused on the credit risk and not on the individual consumer. And reviews are infrequent, done too late, and often based on small sample size. Now, with all those challenges, I'll share with you an overview of our solution. So we start off by ingesting the loan documents and the transaction data. All that information is then processed and structured into a format that can be used to calculate key metrics. The text data can then be fed into a natural language processing model. So natural language processing means teaching the computer how to understand text data. And the transactions can be used to calculate income and expenses. And then all that information can then be used as indicators of risk. So key metrics such as history of default, number of loan inquiries from the natural language processing model, and the net income surplus calculation. Now, all the risk indicators can then be combined to score the loan case as either low, medium, or high risk. And in terms of how, just to give an example of what could be high risk, so we place more emphasis on the serviceability assessment. So if our review model came up with a fail assessment compared to a pass assessment in the actual loan file, we score that as high risk. So once we have the low, medium, and high risk, we can then prioritize our review. So here's a snapshot of the tool. So the Loan Insights section provides a summary of the loan portfolio, so telling the user the type of loans that's in the portfolio, the value, and also gives the user a summary of all the loan assessment at a loan level. So the benefit of this section is it gives the user context before they see the risk assessment. And also, you can see that you can upload multiple files and get the result automatically. So which means you can potentially perform weekly reviews or cover 100% of the cases. So here's the review summary. So the review summary gives the user the outcome of the assessment, so low, medium, or high risk, and also gives the user a detailed overview of the risk areas that's been identified. And the benefit of this section is, benefit of the loan review is the user can quickly prioritize the case. And this slide, the review insights, gives the user enough detail to perform assessment of loans at an individual level, potentially, providing remedial type recommendations, and it gives the user enough information to perform identify systemic risks. So, for example, they might identify that for a particular broker, they tend to not make enough inquiries. Next slide. So just a few quick technical notes on our model. So in terms of alternative data sources, we use publicly available merchant code to map the transactions into more useful categories. We considered benchmarking data, but such as household expenditure measure, but we didn't include it because we decided to focus more on the natural language processing model and also the transactions. We've developed a solution using open source. Yep, sorry, just I'll keep going on the technical notes. So we've developed a tool based on open source libraries and tools. And the advantage of that is you can blend different components that's optimal for the use case. You can benefit from the pool of resource within the open source community as well as commercial support. And you can experiment with the latest AI machine learning research. In terms of the natural language processing model, we trained 2 NLP models. The first one is to recognize the sentences that relate to inquiries. And then the second NLP model, we trained it to detect loan topics such as service, loan purpose, and savings habit, and so on. And just a note on the NLP model, we replicate, as noted before, there's limited data. So to show the power of natural language processing, we decided to replicate the data just so that you can see how it works when the natural language processing model is used to make predictions. So now to the actual loan file cases. So we'll look at this from a risk and compliance analyst perspective. So this case, Alice, she was successful in applying for a personal loan. And when the analyst looks at this case, they'll see that a high risk score has been assigned to it. And when they look into it, they'll find that the reason behind that is the review model came up with a fail assessment because of the negative net income surplus compared to a pass assessment in the actual loan file. And when they look further into it, they'll see that the transactions data show cash withdrawals of $1,600 per month compared to the applicant who declared only $380 per month. And when the risk analysts look at what's coming out of the natural language processing model, which detected an inquiry, when they look into the actual file notes, they'll see that the broker inquired about the cash withdrawals, but didn't really go further by checking the reasonableness. So for this particular case, the risk analyst might be able to conclude that the broker cannot demonstrate they have made the necessary inquiries to understand if the consumer can make repayments. Next slide. For this case, Alexia, who was unsuccessful in applying for a home loan, when the analyst looks at this, they'll see that a high risk score has been assigned, and they'll quickly, when they look into it, they'll quickly find that the reason is because the broker did not record a business purpose declaration, and also they didn't record information about the applicant's prospective negative changes. And when they look at this file note, what's coming out in natural language processing model, they'll see that there were no inquiries detected, and they'll be able to confirm that when they look into the actual lender file note. Next slide. Just staying on the same case. So for this particular case, if the analysts look further, they'll see a variance in the serviceability assessment. And what they'll find is the review model came up with a pass assessment compared to a fail assessment. And what's driving that difference is it looks like the applicant has overestimated their expenses and as a result missed out on the loan. So based on all that information, the risk analyst might be able to conclude that the broker cannot demonstrate that they have gathered enough information before making the loan assessment. And just to extend that further, the analyst might make a recommendation to remediate the applicant's situation, given they missed out on a home loan. Next slide. So just to close off, our key considerations. So we recognize that the data is synthetic, and working with real-world data would be a lot messier and more challenging. We've developed a machine learning model with limited data, as noted before, and we would like more time to try different machine learning models and also tune the parameters further. We've set the risk threshold based on our understanding of the regulatory standard and also our judgment on what we regard as low, medium, or high risk. And we've used the transaction data to calculate income and expenses, which is really just scratching the surface, given the detail that's in the transactions data. And we would like to apply an actuarial lens to it and welcome any opportunities to work with businesses out there to explore that further. Next slide. So that comes to the end of our presentation. Thank you very much for your attention. Please connect with me on LinkedIn by scanning the QR code, and I'm happy to answer questions now and also continue the conversation after the webinar. Thank you.
Thank you, John. Thank you very much for that pithy presentation. Much appreciated. So my aim is to see whether there's 2 or 3 quick questions that may come up, and I think, John, you're open to perhaps dealing with some of those. There's a query here which I think picked up on some of what you mentioned, which is you worked with the information that was provided to you. Are you able to just expand a little bit more about other kinds of data sets? And one of the questions goes to comprehensive credit reporting data and whether or not you think you could make use of that as well.
So we've basically focused on the data that was supplied by ASIC, and we didn't really consider what's possible from the CCR type of data.
Okay, but just to pick on that, just on the other additional data, is there
Sure.
other data that you would think you would really like to be able to make use of?
Yeah, sure. So as mentioned in one of the slides, so we did see the potential with linking the applicant, given we know the applicant's address, potentially you could link even like down to a pretty low level, so like what's called mesh block level. You can link, using their address, you can link it to ABS mesh block level data, and then from that you can gain idea or get data on sort of average mortgage repayment or average income within a street block level. So it's within that street block. There could be like a few thousand people within that street block. So you can get a pretty good idea on, just based on publicly available data, on how reasonable the applicant's estimates are.
Okay. Well, thanks, John. We might just pause there and come back to questions later on.
Sure.
So I just remind people, if they want to ask questions, please go to the Q&A part of the WebEx system, and I'm on the iPad, and you go down to the dots down the bottom and you can bring up Q&A. But then probably some time at the end where we can have all the demonstrators available for some questions. So I think with that, many thanks again, John, and for that presentation. We're now going to move to David Jordan, as you can see from Interrupters.
Well, good morning, everyone. Responsible lending is such a timely topic as it's now pivotal to financial inclusion and economic recovery. A side effect of regulation across the globe has been a growth in financial exclusion. Due to the limitations of the risk and compliance systems, we're seeing millions of self-employed, part-time, casual, gig economy workers who are being disadvantaged by either high rates or a lack of access to finance. We're seeing SME lending at an all-time low. Our economic recovery depends on banks lending, yet we're going to see more and more falling outside of those systems. And we've already seen major banks state, we're not going to lend to the self-employed. So what do those tradespeople do when they can't borrow money to buy tools to get onto economic stimulus projects? And financial services are missing out on a large market because these challenging loans have gone into the too hard basket. So at Interrupters, our focus is to use regtech to solve the too hard basket. We've just been nominated for an Indian Australia Business Award for work in this area. So how can we use regtech to assist banks to drive growth and solve financial exclusion? How can we use SupTech to support supervisory agencies to assess these more complex lending assessments? And how can we use this regtech to improve risk assessment for IFRS, CECL, margin and other capital compliance and risk issues? So I'd like to thank ASIC for this opportunity to present a different approach. Today here we're going to demonstrate a SupTech solution to assist regulators managing the complaints. However, you can see that the modules could equally apply to banks. So what we've done here is brought together innovation from a number of projects we're doing around the world. What we've used here is Microsoft Azure and a low-code development to build a scalable SaaS solution for providing intelligent workflow. We've taken this from a SaaS project that we built for thousands of small banks and credit unions in the United States. We built the concept of intelligent automation of a judgment style assessment from a project we did with Société Générale Bank in France to digitally transform 50,000 risk controls. One of the key issues here was managing skill, quality and consistency when you had 800 staff. The workflow process we created here is a fusion of intelligent automation combined with structured workflow to augment specialist staff in making these consistent quality judgment decisions that is a major challenge for organisations like AFCA. And with what we learned from Société Générale, this structure can help to increase productivity as high as 50%. One of the challenges for banks and regulators is to provide data-driven decisions for what has been human judgment. On a project we're doing in South Africa to enable financial inclusion, we're using psychometric analysis to provide loans to people with little credit history. This is as much a problem in the US as it is in Africa. Based on correspondence from phone calls, emails, chat sessions and application forms, we can now identify whether someone is conservative or a risk taker. We can identify the probability of default. The screen shows here an example of a psychographic report for a borrower, identifying traits from being extrovert to being conscientious. We could identify how open they are to communications, their work ethic, their capacity for analytical thinking. The spider chart shows the traits that are more likely to lead to default. So from this analysis, we found that those that were extrovert would more likely have unsecured debt. And it was so granular that we actually identified a 23% increase in unsecured debt per deviation point. And from the study, we identified that banks needed to monitor and manage people with high scores around agreeable and extroversion. That maybe that these were the last people you should actually give a credit card to. We also found that those high ranked with conscientiousness were less likely to have a credit card and more likely to have investments. So from the regulator's side, assessing a complaint, if they saw somebody with a conscientiousness personalities trait and a high credit card balance, then it would be suggested that the bank may not have provided a suitable loan, that it may have been a credit card or nothing. And the questions could be asked why the banks do not provide a lower rate term loan in this situation. We compared the psychometric outcomes of people that actually had credit files. And then using the analysis, we identified about a 91% confidence of coming to the same assessment as a credit history check. This would allow institutions to have confidence to provide credit to those with little credit history, and now those people that have had their credit history damaged by COVID. So based on this, we could forecast that if an institution approved 90% of the loan applications they received, that they would have a default rate of 3.5%. What we have found is other ways to calculate provisions for IFRS 9 and CECL, that we can help with better pricing models that actually benefit consumers and actually help to grow loans for the bank with better risk tools. We quickly developed a cloud-based solution using low-code development to load a range of documents, identify the type, validate them, and cross-reference them. We encrypted data, preventing data loss and ensuring privacy. This built a structured database that we could do our analytics from. So within minutes, algorithms could come up with scores and highlight key areas to be investigated, as shown on the scorecard dashboard that you see in one of the screenshots. A common scenario for many agencies around the world is that analysts are burnt out, taking considerable time to compile data and have little more than spreadsheets for analysis tools. This leads to major problems of quality and consistency that we can easily solve with intelligent automation. Then we integrate a range of artificial intelligence tools to scan and extract details from documents as part of that workflow. So, for example, we're extracting pay details from the pay statement, which we can then use to compare to the loan application form. So combining AI with the database and intelligent algorithms, we can identify discrepancies within minutes of loading the data. So we identified that on one loan application that the payslip did not agree with the amounts deposited in the bank account, and this raises a flag for checking on the credit score. We can identify that one person said that they shared rent with the spouse on the loan application, but the full rent came out of the individual's account, a common issue not picked up. We identify that the expenses quoted on the loan application form did not agree with the statement. And we could then calculate the loan affordability based on these discrepancies, which came up on a number of occasions to be lower than what the bank's assessment was. The workflow process has added another module, which is the ability to use algorithms to do scenarios. So for instance, we had someone borrowing to buy a $100,000 Tesla car. The capacity calculations we found already had understated the expenses, but the biggest issue was that no account was taken into the related costs of such an expensive car. With the scenarios, we could include an additional $8,000 a year of insurance that had a big impact to the capacity calculations. So the scenario analysis is not used enough but it has an important part of IFRS calculations for the banks, as it is capacity calculations for the banks and the regulators. As we have captured all the data into one place and the decision-making process is done in one application, we're now actually able to add machine learning around the end-to-end process, which is normally very difficult. We can now use bots to monitor staff decisions and highlight where more training can be done for consistency and quality of decisions. Another issue we found with Societe Generale Bank was the significant time taken doing research. And with a chatbot process designed for analysis, we could have a big impact on productivity. A large proportion of documents in the ASIC dataset are actually stored digitally in the bank systems. It will be beneficial for the sector to create data standards for loan application, credit checks, calculations that are in the bank systems, and to transmit this between banks and the regulators, and also for audit and internal control systems. We see this as a great opportunity for greater productivity. So what were some of the challenges we observed? One thing we see is the need for 12 months of data to get more meaningful insights for the challenging loans who have greater volatility of transactions. Open banking and intelligent automation is going to make this a lot easier. We need to create some industry templates for the variety of scenarios to apply to loan applications. There is a large volume of issues to consider and shouldn't be done by individuals. I see this as a great opportunity for third-party vendors to build and maintain those scenarios. And currently, the last one was we spoon-feed borrowers with loan application forms. We need more freehand text to be able to have the data to assess their psychometric analysis, and this will require a rethink of loan applications. Well, that was a quick explanation in 10 minutes of the solution we put forward to ASIC. The solution was aimed to try and cover off character, capacity and conditions that are all important issues in ensuring a suitable loan and responsible lending. We are seeing great interest in rethinking lending risk around the world post-COVID. I hope this presentation was useful. My details are on the ASIC website, and I'm happy to take further questions if we can't answer them all today. Thank you very much for your time.
Just a couple of reflections on that. David, what I might do is ask whether in 3 minutes you could give just a potted summary, again, of the essence, I think, of what you put forward, so that at least those who couldn't hear can get that from you directly. But there are questions as well, David. So there were certainly people who did hear. So after you've maybe done a bit of a 3-minute summary, we can go to some of those questions, if that's all right. So David, are you able to just do an essence summary, please?
Yes, sure, Adam. So I guess very quickly, what the focus that we're looking a lot more on is the people that have missing out a bit at the moment. The financial exclusion has become an increasing problem with regulation. We're looking at other ways of solving that problem, especially with organisations that have poor credit scores or limited credit files. So one of the things we're looking at was psychometric measures, where we actually look at the psychology of the person rather than looking at their credit history. And we find out roughly about a 91% accuracy in identifying that. So it gives us some options to look at different ways of assessing risk from the IFRS and CSAL side, as well as looking at ways that we can solve problems assessing risk on people that are that have been financially excluded. We put a solution together that's really about an end-to-end scenario, and we geared this up for the regulatory supervisory process to look at it for a complaint, just to give some perspectives. One of the things that we're trying to do is to try and merge an end-to-end scenario of pulling data in, helping the judgment process with the individuals, coordinating data. And then one of the additional things that we were doing that we don't see a lot of is to actually add a scenario modeling. So the example that we had was that a lady that was buying a Tesla car, whilst all the credit checking and working out whether it was serviceable, didn't take into account that she was going to have to pay another $8,000 insurance for an expensive car like that. And that's another area that we were adding onto that module. So the whole idea was to increase productivity, put machine learning around helping to drive quality and consistency around decision making, and try to improve the options to open up serviceability, to open up lending to people like self-employed, part-time, casual, small business, etc. So it was a quick run up.
Thank you very much for doing that, David, and hopefully that helped those who were not able to listen to your presentation on via the video. But I think I've picked up two threads of comments here, and one of them I think is equally relevant for John as well. So I think the first one's about the psychometric testing. I think, David, there's clearly some interest on that. And so there is a couple of aspects to this. Can you comment a little bit about privacy ethical concerns and how that is managed and mitigated? And I think the second aspect of it is, the risks of people gaming data and so on. So to the degree that you can rely on objective information for the purposes of that testing. So are you able to comment on those two questions, please?
Yeah, so the data that we were actually doing the original psychometric is data that was being provided on loan application forms, etc. So it is actually information that's provided. So it could be a telephone call with the lending manager, it could be chat sessions, it could be email correspondence, it could be the actual loan application. We do actually have an option to go to social media and actually evaluate social media. And I think that's an area where you do step onto the privacy. But I think as an internal audit process, it could be a very good option for doing a checking against it for what you were talking about is the gaming process. So I think there's a couple of things that we can do around the gaming to try and say, right, look for patterns where organized crime is starting to create templates of how you would write a loan application form to test that environment. But I think it shouldn't be something that is done in isolation. It should be done with multiple factors as well.
Okay, and I think that has almost answered the next question I was going to ask you, which was, okay, so some people have asked, look, I've got to comply with the law and I've got a test I need to comply with. How much can I make use of psychometric testing in that process? Is it a contribution or can it replace my reliance on transactional information? Have you got a thought on that, David?
Yeah, I think this is one of the problems that you actually have is that you might not actually have enough transactional data to make that decision. And I mean, an example in the United States at the moment is you can't get a loan without actually having credit history, and you can't get credit history if you haven't got a loan. So this is a very good opportunity to, I guess, create the stepping door of something that might be a small loan of $4,000 to get that person up to stage one. And then at that stage, then you might be assuming to other processes. But I think it also adds some validation against the credit history. I think the problems that we've got at the moment is we used to have the old day that the bank manager used to know everybody around the block. As we became automated, we've lost that understanding of the community and everything else. And this probably is giving an opportunity to build back a bit about the understanding of people again.
Okay, thank you, David. I may ask a question which is perhaps direct to John and then for you to follow up, David. There's questions around data quality and the content that we receive. So that has some themes about it. How well do these solutions work where there's still quite a lot of written material in handwriting? So there's that component. Secondly, how might these solutions actually assist in automating? And maybe are there easy solutions to assist people to put all the data in a way that it is more readable? So, John, did you have any observations on those two bits? And then David, by all means, add a compliment to that.
Sure. Yeah, just really in relation to OCR. So yes, we were very, I guess, spoiled by ASIC getting data that's not, written and so on. So we will focus on building the actual solution that's focused on the problem statement rather than a technical part of the solution. So with that in mind, I think the OCR problem, it is still a problem. And I guess I'll throw the question out there is what is the proportion of loan or lending that's still done with written notes and so on. So I think I don't really have the data on that, but I feel like the direction is everything being digitalized. So maybe the OCR problem is not really the most significant part of the problem with complying. So I think that's the comment I'll make on OCR. And there's I believe there's a lot of technology out there, like proprietary or even open source as well, that tries to solve the OCR problem. So I think the solution can be modified to include some sort of to have a solution to treat the technical problem of OCR.
John?
Yeah.
Sorry, you got keep. Anything else you wanted to add?
So there was another question on ideas on automating the data entry and so on. I suppose my understanding is there's a lot of aggregators out there that have really slick platforms that helps the whole process, helps digitalize the whole process. So I think, I'm not across all the solutions out there, but I get the feeling that that's happening. Yeah.
Okay, thanks, John. So it may well be a practical issue now. There are things that perhaps can assist mitigate that. And then as we evolve, this problem may reduce. But David, have you got a comment on it?
I'd say that what I'm looking, so I've been working in a bit of the developing nations in that, and I think where we're seeing a lot of the change is a lot of more mobile phone applications. And so I think we'd be moving away from that environment. I would see that something like a chatbot process where you interactively worked with the person to do the loan application form and collect the data, is starting to build up some of that psychometric data. But you start to remove away that sort of required written loan applications. And I think we're moving quite fast away from that environment.
Okay, thank you. So we might pause there and move to our third presenter, but it may well be that there's questions that are relevant across all presenters. So with that, I'd like to move to Samantha Clark and Advice RegTech. And if I'm correct, I think we're going to go to Plan B, which is that I think Samantha's going to speak to the slides that we have. And I should say, I've been informed that the videos, I think David's comfortable with this, will be made available on our webpage. So it will be there for people to come back to and watch if they weren't able to hear it just now. So can I move over to Samantha, please?
Advice RegTech SAMI is a leader in regulatory requirement solutions for compliance reviews. SAMI compliance software is designed to enhance the efficiency and effectiveness of reviews. SAMI supports the review of various loan types, including personal loans, home loans, and car loans. Let's dive into a case study. Charlie is a 34-year-old divorced mother of one wanting to buy a car. She works as a casual barista with a low monthly income. Charlie would like a car finance loan for over $75,000. Charlie fills in the loan application and provides other information, including her payslips, for assessment. For the reviewer to check all this information in a traditional manual way is a real headache. And there are so many regulatory requirements to be considered for each loan too. Well, help is at hand. The reviewer can use SAMI compliance software to support the assessment against regulatory requirements for each file. Let's dive into Charlie Cohen's file. SAMI enables a human reviewer to identify risks, such as information inconsistency, unsuitable credit product recommendations, and consumer financial circumstances. SAMI's assessment of the Charlie Cohen file can be seen in the top blue banner. In all file assessments, SAMI pre-assesses a file grade through question-level results, which can be seen in the circles, as well as the aggregate risk severity in the bars on the top right side. Let's dive deeper. Opening up the verification section, SAMI helps to highlight an inconsistency of income between the pay slips and the loan application. SAMI highlights the relevant sections to quickly identify that the loan application shows a monthly income of $3,142, whereas the combined payslips show a monthly income of $3,217. This makes it easy for the reviewer to efficiently cross-check information, note issues, and validate or update any scores. Looking at the lender's assessment, the reviewer can easily identify the 95% LVR, 450 credit score, and sub 500 monthly net income surplus, and improperly recorded salary information. Advise regtech SAMI, enabling efficient, effective compliance checks for responsible lending file reviews, as well as for best interest duty obligations to consumers.
Thank you for that. So Samantha, I think, are you going to now supplement that with presentation? Thank you.
Thank you so much. Well, I hope you enjoyed that video. Thanks so much for the opportunity to demonstrate the capabilities of the Advice regtech SAMI software. Next. So what's SAMI all about? SAMI is all about improving the efficiency and effectiveness of compliance, supporting experts to scale their human expertise, enable quality and consistency across the file reviews. Next. So SAMI has its foundations in the financial advice compliance review space, and we've applied that capability to the regulatory guide 209 and 273, which, as we all know, is around responsible lending, and the new RG 273 around mortgage broker and relevant credit licensee obligations for best interest duty. So what does SAMI enable the efficient file review of? So in this particular case study for ASIC, we focused on the requirements and the objectives, helping human reviewers check for inquiries and verification, the steps they'd take, checking on the financial situation, consistencies and inconsistencies, enabling validation of the purpose of the loan, helping to assess the suitability, or as said at the beginning of the presentation, whether it's not suitable, relevant, and looking for inconsistent information. Importantly, it's all about record keeping, so identifying missing and incomplete documents and information, or what should be relevant information in those various documents. A key point of difference for the Advice regtech SAMI capability is our application of the regulatory guide for best interest duty. So that helps enable the principles-based consideration and the decision capture of whether, in the case in Australia for the international audience, mortgage brokers and credit licensees here have acted in the best interests of consumers. Next. So what are the different elements of the SAMI solution, the technical solution? Well, first of all, as you've seen on that demonstration video, it's a compliance workbench. So we enable the efficient, user-friendly, we have principles easy, enjoyable and engaging, platform to enable the compliance reviewers to ingest numerous files, to have those pre-assessed and scored, and to enable them to go about their work in a very practical way on the workbench aspect of the software. The layer up from that, sorry, if we could just stay on that previous slide, the layer up from that is it's an audit decision record, and that captures and locks in for look-back purposes all of the reviews, results and file ratings. And at the same time, everything that happens on the compliance workbench is fed up into the real-time management reporting, and I can show you some of that in a moment. So what did we find that SAMI was good at when we did this ASIC assessment on the synthetic data set? First of all, SAMI has quite strong capability in recognising and categorising the documents. We found that it didn't categorise them instantly with some, but we refined that over the course of the period to provide a high level of accuracy on that front. It OCRs those documents, it highlights the relevant information within those documents for efficient assessment. The dashboard reporting on key risk indicators is a core part and linked part of the platform, and so that enables the immediate viewability by both the reviewer, management, risk and audit committees, and others who have access to the system, to see the relevant risks that are and trends and outliers that are emerging in the system. I'll talk about a bit more about that in the technical solution part in a moment. We've got a very good workflow management system. Now, that wasn't enabled to be demonstrated on the ASIC dataset because they were distinct quarantine files, and we just manually uploaded them to the software, which is a capability we have as well. Integrating with external systems is something we normally do in practice as well. Best practice security, as you'd imagine, being financial services focused, and decision report for compliance checks. The information and files provided in the ASIC dataset for RG, for this example, for the regulatory guides, didn't provide a lot of that additional real information that applies in real life. So but that's a capability that we have to enable answering of those questions. Challenges. So being, as I mentioned, principles-based, it's difficult for any compliance or automated system to provide very definitive yes/no answers. And in some cases, extract certain elements of the data as well on variable templates and handwriting and signatures. We can answer some of those questions in the question set. Next. So how does it work? It's a 4-step process. We prepare the documents, we integrate, categorize, OCR, and then we move into step 2, which is assess. We pre-assess, we highlight, we pre-score. The risk tags are activated automatically through the SAMI software, and it enables then it to be step 3, served up and verified by the human reviewers. And the 4th element, of course, is the reporting, which is integrated with all of that. Next. So from a more technical solution, so we integrate with those in the responsible lending case. It would be with the broker systems. In our financial advice cases, it's with the various CRMs where all the documents are kept. So we upload the applications, the client profiles, the pay slips, the bank statements, the credit cards, the reports, any document or data feed that's relevant for the assessment. The system then reads those files, extracts the data, identifies a not just a risk score, because a lot of the risk scores are in those risk documents that are ingested, but it identifies a compliance risk score, different to the credit risk score. We can scan through the transactional data as well, categorize the information, and apply the business rules. So the business rules we apply, we use a selection of different models based on the question and the document at hand. So whether it's from simple machine rules to machine learning to artificial intelligence, depending on the specific regulatory guide question set document, we match the appropriate model for that. Then we go through an acceptance of fail and pass, and importantly, we suggest a grade for every file. And now all of this happens in the course of a minute to 5 minutes for each file, depending on how much information is in there. But importantly, we leave the file rating, the final file rating, for the human reviewer to look in. Next. The results across the data set, there was a lot of E's and D's, which are on the lower end of the scores when we did this, requiring further review, but there were a few outstanding cases. So we've got quite sophisticated dashboard capability and a number of different widgets that enable the slicing and dicing of data across all of the results that have come from the assessment. Next. So to give you a little bit more on best interest duty, because I'm conscious of time as well, just a few minutes left. The question sets we have, as you may have seen in the demo, focuses on the inquiries and the verification, the assessment, and also we layer it up where it's relevant for best interest duty. And so that enables the documents and like we do with file notes and assessment and lender assessment and additional reasonable inquiries to be run through the system, and then for that question set to respond appropriately to that as well. You'll see in that screen there's a hover note for the RG, the relevant part of the regulatory guide for this. We enable relevant hover notes to pop up for every part of the question set, so that it enables the reviewers to remain very consistent in their assessments. So, if SAMI hasn't assessed it correctly, no system's going to get everything right all the time, and especially in these very subjective principles-based areas, we enable the user to go back to source to actually see what it was that the regulators and all the organisational policies, they can be added here as well to help the reviewer make that judgment call. Next. We've also covered, as you've seen in the demo video, the car loan single example, and that raised a number of inconsistencies in the information in the pay slips and the bank feeds, and potentially unsuitable loan assessment as well. Next. Inquiries and verification. We enable this viewability on multiple documents against key questions to enable that consistency check. Next. Purpose of the loan. Next. And importantly, the assessment of suitability. Next. Thank you. All of the risk reporting, and I'll finish on this slide, all of the risk reporting is aggregated up immediately based on the risk tags for each question into the dashboard, and this is a dynamic widget that enables the users of the system to keep their finger on the pulse and identify trends to be preemptive and proactive in managing the risks that they're seeing coming up across the file assessments. Next. Thank you so much for your time today. If you'd like any further information on Advice RegTech SAMI, please reach out to me at info@adviceregtech.com, and I look forward to your questions now.
Thank you, Samantha. So I've been watching a few of the questions, so I think some of them I'll direct to you, but again, it may be that some are also open for John and David to also comment on as well. Maybe you can comment a bit about the OCR topic as well. That again has still got a theme, sort of the working with scanned documentation, PDFs, the quality of OCR. If you could maybe make your own observation about that in the future.
Thank you. Yes. So the system in use in real life has been developed over the last few years to particularly focus on that, because it is a challenge. So the synthetic documents we had here were quite easy to OCR because they were typed and written in large part. But in real life, a lot of the pay slips and credit card statements and bank statements and file notes are, skew-if or scanned in a strange way, or scanned in upside down when they're kind of laid up into the software. So we've developed capability over time to deal with, those real-life variabilities that are in scanned documents, and then when they OCR in as well, to pick up where key information is in those documents. I've got to say, we still find challenges where there's strange squiggles or overwrites on various documents. So that's something we're endeavouring to improve our capability on.
Well, thanks for that. I think obviously that it's a very real practical issue, which is still present, I think, in whatever solutions are being considered at the moment. But I think all of you have pointed to potential measures to respond to that, as well as thinking about other data sets as well that could support decision making, which sort of links to a question, and I don't want to put you in a difficult spot, Samantha, but I'll ask all of you. I mean, there are queries around trying to verify income or getting the best view of income, and so there's pay slips, and with, I suppose, the consumer data right and others, there's other information, transactional information. So I'll ask each one of you just to observe on that. But Samantha, did you have an observation on that?
Yes, so we attempted it in multiple different ways. So we've got the data feeds, thank you, from the synthetic data set, and our system has the capability to ingest, Excel files and data feeds, as well as, the Word document, the OCR document. So it was how we handled that by interrogating that information in the different file types. To enable the viewer to see it clearly as well, we, in an Excel file format, we converted it into that. The viewer could be landed visually on the spot to find that. But there's also the algorithm we've got behind the scenes that has to change fortnightly payments into monthly assessment to then match with what's on the monthly assessment in the application forms as well. So there's OCR aspects, there's consistency aspects, there's algorithm aspects, and then serving up a response.
Thanks, Samantha. So, I mean, the capacity to perhaps deal with a range of data sets, then probably working with the business about how they want to make their decisions and what weight they want to give to those. So, David, did you have an observation on income?
Yeah, it's an interesting challenge, and especially when you're dealing with self-employed people, and that, they might say, we don't pay ourselves any money for the first 6 months of the year and then pay themselves double for the last 6 months of the year. And then the banks will often look at their tax assessment, and it gets really challenging. What we're really kind of curious to see is how we can use the psychometric analysis to identify the different strategies to investigate income. So if you've identified somebody that's trustworthy and you've got a reasonable level of income confidence, you may not have to dig down as deep. If somebody's more questionable, then you need to do a far more research. So I think there's some opportunities into doing that. But I think also looking at, duplicating some of what tax department's trying to do is to try and look at other aspects where you can judge whether the income is as appropriate as what they're saying.
Thank you, David. John, did you want to make any additional comment?
Yeah, sure.
Sorry, John.
You've got my mute.
Are you there?
Okay, hello?
Yeah, I can hear you, John. It's really,
okay.
Do you have an additional comment about information around income?
Yeah, sure. Income, I guess it's sensitive. It's a sensitive issue for a lot of people. So I'll approach the question from two perspectives. So from the perspective of compliance, I don't think there should be anything stopping us from using the transaction data, because I can see that being used to identify any major inconsistencies. So I think it's a good idea to use transaction data to get a view of the income. From actual credit assessment perspective, I think it'll take longer to start using the transaction data, because you got to look at that from a customer perspective. I think, if the customer is not comfortable with people looking at the transactions, that's not going to happen. So I want to look at it from sort of the product and consumer perspective, and then in the back end, where from a compliance perspective, why shouldn't you use the data that's there to understand the situation?
Thanks, John. Thanks for all those observations on that question about income. I think I've got two kinds of questions I'm going to ask now. And Samantha, it's interesting how your business started in the financial advice territory and moving across here, and they've both got these subjective tests in there about, and so on. So, and there's a question about it. Can you just add any observation about the challenge of trying to use technology to try to give indicators to how someone is meeting or not meeting those kind of subjective tests, such as the best interest duties?
Yes, thank you. So, very early on when we were dealing with subjective and principle-based question sets, our solution to that over time has really been about breaking it down as much as we can. So if there's a question around, broad brush questions, suitability or fit for purpose, for example, or we would look to break that down into a number of what we call sub-questions, and SAMI, an automated technology solution, can pre-answer a lot of the sub-questions, but then usually with a subjective one, there's a number of sub-questions towards the end of that require human assessment. So our attempt has been to make it more efficient for the human to have the pre-assessed answers for part of the question they're trying to answer, so they're saving a lot of time. And it enables them to see the various information and documents and help that make that judgment. But then the final icing on the cake is the human smarts, the human judgment. So our attempt to that has not been to say a definitive yes or no for a big, broad brush subjective question, but to break down each of those into sometimes 9 sub-questions or multiple questions to answer that. And that's been our approach.
Okay, thank you, Samantha, for that. I'll now ask the last question really to all of you. There's a query about, okay, if you were looking at the lending market, do you think there's particular subsectors of it that lend itself more apt for use of the technologies at present, or is it something that really is applicable across them all? So it's a query about where you think best opportunities for penetration in supporting lenders in best practices and monitoring. So I might go reverse here this time. So John, do you have any observation on that? Where do you think the best opportunities lie?
I think probably home loans, because it's a lot more complicated and it's a much higher impact. So I think for that reason, so complicated, you're looking at joint applications and so on, and much higher impact because you don't want, given the significance of the loan, like that's where there's the highest impact. So I think that's where there'll be better penetration.
Okay, thank you for that, John. So go for the challenge and crack that nut. So David, do you have an observation on that?
My interest is actually more around that, again, the self-employed, small business, etc. Because at the moment it's a challenge is that it's far more complex, but the return on investment is poorer, but the margin is higher for the business. So I think this is an area of great opportunity, and I think with what's coming out of post-COVID, where we need to really look at how to stimulate the market, and banks have to lend. That's that area of self-employed, part-time, casual, small businesses are really a critical area to work on.
Thank you, David. And Samantha?
Yes, well, law and regulation applies to all of these areas. So I think if you have to narrow it down to an area, where are the examples that credit licensees and mortgage brokers are finding there's the most manual work or the most non-compliant cases? So, there's a lot of concern at the moment around the car finance area or the personal lending area, especially for vulnerable consumers. And with COVID in place, there's perhaps a bit more of a relaxation of kind of the lending guidelines, but it's still beholden upon all of us to make sure that the vulnerable consumers are protected. And I think this type of technology can help scan at scale and look for those outliers to keep on things where consumer protections are perhaps getting a bit lax. And so I'd say wherever there's high volume of loans, these types of regtech technology should be applied to them.
Okay, thank you. So I'm sure all of you would say it could tackle them all, but don't shy away from the problems, I think is one theme I'm getting from all of you. I am going to ask one more question because it's come up in just a few more questions just now, but this will be the last one. I've probably fallen in the trap about talking about lenders, but there's been a few questions about, well, there's lenders and there's intermediaries like mortgage brokers and so on. So there's a variety of players in the market. So I just wondered whether any of you got observations just on, well, the applicability of these kind of solutions for those different players and their different roles within the sector. So maybe this time I'll start with you, David. Any thought on that?
It's a challenging one, but I think it's what we've done is to try and say, look, there's a whole range of modules, and then what we adapt is to fit within the specific environments. And I think looking like in India, they have the financial stack, and that's actually changed the whole way the intermediaries actually work. That's very different to what we'd see in US and Australia. So I think there's an opportunity of doing that and then actually integrating the components so that the modules that maybe with the mortgage broker fits nice and easily with the banker's solution, and then also flows on to regulators when they're trying to do supervision processes as well.
Thank you, David. Samantha, maybe I'll go to you next this time.
Thank you. Yes, so clearly there's separate but complementary regulations that apply to credit licensees and mortgage brokers and mortgage representatives and mortgage managers. You know, there's nuances there. So these types of technologies can be used at the pre-vet or the pre-issue of a loan stage, as well as at the audit and review stage as well. So I think as much as they can be applied at the pre-issue stage, that's advantageous, I believe, for consumers, whether you're a mortgage broker or a credit licensee lender, or if you're wanting to remediate, it's a good chance to get ahead of perhaps some remediation projects coming up, but by using these types of technology to scan and scale the issues that might be present in your book.
Thanks, Samantha. And John, did you want to add anything?
Yeah, sure. So I think from a lender's perspective, given they have a good view of the risk and they ultimately underwrite the risk, I think from their perspective they should be interested in applying these type of solutions. And I guess from the mortgage credit licensee perspective, given they're closer to the customer and they can probably move faster, they might be interested in doing it as well as for compliance, as well as it might help them with differentiating their business as well.
Thanks, John. So I think all of you have indicated that, yeah, this is adaptable and flexible and can be scaled for the different needs for the players in the marketplace. And that's a nice place to finish, I think. And so I really wanted to thank all of you for your presentations and the effort and energy you put into dealing with the problem. And it's been great to be able to do this sort of panel-like conversation at the end. So for those who've been listening in, this was all about trying to show illustrations of the potential of these technologies. ASIC's not endorsing anybody. We're just saying these are all glimmers and positive signs to how these kind of solutions can be used. And hopefully listeners can take away ideas and thoughts and where that opportunities lie going forward. So again, many thanks to the presenters for that time and effort before this and today. I appreciate that. So now in this second part of the session, we have two bits. The first is a few reflections just from ASIC on the exercise we did on the problem solving and illustrated by some of the demonstrations you saw earlier. And then we go into a panel conversation with 4 representatives of industry, where we get to talk a little bit about their experience, what they're seeing, where the opportunities are, and maybe what some of the challenges are. So without further ado, I'm going to move on to Kim Wynn from ASIC, who's a senior officer in our credit and banking team, who's been fundamental to this exercise. She's worked on it right from the beginning. And so I want to thank her publicly about that, but also to give her the opportunity to now make some observations on what we saw from the demonstrators in response to our problem. Over to you, Kim.
Thanks, Mark, for the introduction. Hello, everyone, and thank you for joining us for the second half of this webinar. I would also like to say thank you to our demonstrators for the time that they have committed to this event. I'm sure everyone will agree that the presentations were really insightful and that there are some interesting takeaways. As one of the project leads for this event, I will be sharing our observations by drawing out key themes and also touching on some of the potential challenges and limitations. Before I start, it might be helpful if I provide a quick recap on each of the demonstrations we've seen. Our first presenter, Skillful Analytics, showcased their responsible lending review tool, which uses a combination of key metrics, natural language processing, or NLP, and a serviceability model to detect risks that may indicate non-compliance. For example, they exhibited 2 NLP models which were trained to extract information from lender application file notes and used publicly available merchant code mapping data to sort transactions for analysis. Next up, we saw Interrupters, who demonstrated a cloud-based solution with artificial intelligence or AI components and data analytics to drive productivity and enhanced decision-making. Interrupters also showcase their unique approach to the lending assessment process through the use of psychometric analysis to identify behavioural traits and probability of default. Last but not least, we saw before our break Advice regtech's demonstration of SAMI. SAMI is a human fusion solution that provides automated assistance for compliance reviews through a workflow management system. As part of SAMI's compliance function, AI technology, machine learning models, and business rules are used to ingest, structure, and analyse consumer data. Reflecting on the demonstrations, it was very interesting to see the different angles and approaches that firms have taken to tackle the problem statement. We continue to highly encourage lateral thinking, innovation, and creative approaches to problem solving. All presenters were able to demonstrate end-to-end solutions, leveraging AI technology and rules-based systems to read, ingest, and analyse data to extract key insights. These rules can identify missing documents, such as a payslip, or missing information within a document, for example, an incomplete requirements and objectives checklist. They can also identify inconsistent information present within a file. For instance, the detection of large amounts of buy now, pay later transactions, where the application form did not disclose this information. We also saw varying levels of automation across the demonstrations. Automation is always going to be more efficient than a purely manual process. It can offer capacity uplift, thereby allowing people to use their time better. Used as a tool, it can assist reviewers in their assessment and make their jobs simpler. If we relate this back to the dataset, potential risks such as defaults listed in a credit report, or unusually high expenditure in certain categories, such as gambling, can be identified by the solution and then verified or analysed by a reviewer. However, there are some limitations that can be seen from the results. As you would appreciate, there are endless scenarios when it comes to a consumer's financial situation or the extent of disclosure a consumer provides when applying for credit. These scenarios can be complex and varied, and risks may not be easily identified. I'll explain with an example. In one of our consumer loan files, we included a scenario where the consumers intentionally omit information on the application form. In this scenario, a couple jointly applied for a home loan. They have 2 children who attend a private school, but did not disclose the private school fees. The bank transaction data did not contain any school fee payments. However, it did contain payments for extracurricular activities, where the private school's name appeared in the transaction description. The limitation here was the inability of technology to identify clues in the transaction data that the children in fact attended a private school. Such fees are significant, and if these were taken into account, the applicants would not meet the serviceability requirements of the loan. As you can see, this is a tricky scenario that would be difficult to pick up, but we do understand the power and potential of machine learning, so there is great potential for rapid improvement in results. The limitation here is that we only provided a small sample size of data. The challenge, therefore, is for firms to obtain the high volumes of data needed to support this training. Moreover, subject matter expertise is crucial for the development of business rules. Collaboration and partnerships between regtechs, industry, and regulators are therefore essential for continued growth in this sector. To varying degrees, all demonstrators have analysed the financial metrics contained in our dataset. What stood out to be a different and exciting prospect is the psychometric analysis capability demonstrated by interrupters. It was very interesting to hear about their approach in making intelligent assessments around a prospective borrower's character and behavioural traits. It was unfortunate that the dataset we provided was not broad enough to support this testing. However, it was very helpful for interrupters to illustrate this capability, nevertheless, with their own data. Speaking of drawing on other data sets outside of what ASIC provided, Skillful Analytics used publicly available merchant code mapping data to categorize and analyze transactions. As Christian mentioned earlier, in compiling our synthetic data set, we intentionally included bank transaction data that is compliant with the CDR standards. We wanted to test how it can be used in the context of responsible lending. We are very pleased to see that there are benefits to be gained from leveraging this standardized and structured form of data to allow for a more thorough assessment of a loan file. The final observation I'd like to make, which is evident across all three demonstrations, is the conceptualization of outputs and how this translates into actionable insights and assists with decision-making. We saw the benefits of SAMI's interactive compliance workbench and the combination of automated efficiency and human judgment in file reviews. Across all the solutions, the various visual aids, such as dashboard reporting and risk scorecards, are very helpful for the assessment and review process. To finish up my presentation, I would just like to make some concluding comments. ASIC sees great potential for regtech solutions to assist with good practice lending, but there are also challenges. This will be explored further in our upcoming panel discussion, but the two obvious challenges specific to the development of regtech solutions are around rule construction and data quality. As we have seen, there are different capabilities and ways to integrate regtech. So there needs to be a consideration of how the technology will suit or meet the user's needs. The role of compliance professionals, managers, and executives is critical in adopting the right technology and making the right decisions. Lastly, any tool will only be as good as its inputs. There needs to be sufficient investment in time, resources, and expertise. Collaboration is key, as subject matter experts will have the deep experience and knowledge to know what to look for. And on that note, I'll now hand back to Mark. Thank you.
Thank you, Kim. Thank you very much for those thoughtful observations that you made about the presentations around the problem statement. And I think that will weave very nicely into the panel conversation, because now we'll find out whether some of those same themes are things that people wish to observe on and bring out in the conversation that we're about to have. So let me move to the panel session and just briefly introduce the panelists. And our aim is to do a bit of a Q&A conversation rather than downloads from each of the presenters. And we'll speak for maybe 30, 35 minutes or so, and then see whether there's any questions that get asked from the floor. So firstly, I'd like to introduce Joe Miklas, who is the Chief Risk Officer of Latitude Financial Services. Joe's had many different roles in different places in C-suite executive, over 25 years of experience in business and financial services globally. Larissa Shafir is another panelist who serves as the Head of Independent Compliance Risk Management at Citigroup. Again, she's got over 25 years experience in the financial services sector, again, gained all over the place and all over the world. So thank you, Larissa, for joining us. Now the gentleman, David McQueen, who is the Chief Regulation and Compliance Officer of Loan Market Group, responsible for business risk compliance and legal functions. And Daniel Knight, who is a partner at K&L Gates Financial Services Practice. He advises clients across financial services and the credit sector and helps them develop practical solutions to meet their licensing and ongoing compliance obligations. So welcome all four of you to this panel session, and I thank you for your availability to be part of this conversation. So we've got a series of questions that we've sort of worked up that we can see how we go in an open conversation in a webinar sort of environment. Really, the first question is a bit of a warm-up, and I was going to ask each one of you to just sort of touch on any technological story in relation to the businesses that you're involved in. It doesn't have to be about regtech, just somewhere where you've experienced and there's a brief explanation or story you want to give about that use of technology in your business. So I might start with Joe, if I can. Anything you wanted to highlight?
Thanks, Mark. And hi, everybody. So since starting at Latitude, we've been embarking on a series of testing and learning, trialling new technologies and proofs of concepts. So one thing that one story I might share to warm things up was that we partnered with a machine learning and natural language processing technology company to see if we could relatively easily understand and apply tech platforms to known problems that we have. So we focused that on two use cases. One was to try and improve our fraud detection. And we actually were able to demonstrate an uplift in detection rates from some of the conventional tools that are in market. And obviously that has a financial outcome for our organisation, but it also has an outcome for our customers as well, because the impact of not being able to detect fraud, can have inconvenience and financial outcomes for our customers. So that was a good use case that we proved successful using that technology. And then the other one was whether we could predict customers in hardship before they actually told us that they were in hardship. So we used some predictive machine learning modelling and we were able to get a 13 times better outcome to our current practices. So, that obviously has great potential for us in making sure that we meet our customers' needs. I guess, key is really just trying to prove out the efficiencies of the model building process, but also proving that the models themselves actually are of use and do actually work.
Thanks, Joe. So there's two really great examples. I might go to David McQueen. Anything you wanted to just nominate at the beginning?
Yeah, sure. Thanks. And hi, everyone. Great to see you all, albeit virtually. Sean Hughes mentioned this morning, I think when we kicked off, just around customers demanding seamless digital experiences. And I completely agree. And as he mentioned that, I was just thinking, an area that we've had great feedback at loan market and within the mortgage broking space is our customers touch my CRM application that we call the online fact find. Now, essentially, it's an interactive way for our brokers to work with our consumers to capture their information. And it's also aligned to our other tech tools, such as online bank statement technology and document delivery collection. So the way that all integrates together to support that customer application process has really been beneficial, particularly in a COVID environment. Now, the other way that also works from a reg or compliance perspective is that essentially it's moving away from that pen and paper solution to having everything captured digitally. And when we've got things captured digitally, we can obviously start to measure that a lot more effectively, get an abundance of data, and ensure that obviously we're meeting those regulatory demands.
Thanks, David. Larissa, is there an example you would like to highlight? Sorry, Larissa, you're on mute. Yeah, I can hear you now.
Yes. All right. Thank you very much. And thanks for inviting me to the panel. I guess one thing I would highlight is the increasing usefulness of chatbots. I think we're seeing the chatbots becoming more and more intelligent and more capable of answering the needs of our consumers. One of the things I wanted to share is during the recent COVID situation, when we were experiencing a lot of calls from consumers about their loans, we were able to shift some of our types of interactions with consumers to chatbots and to IVR, and move our sensitive and empathetic conversations with consumers who are struggling or experiencing difficulty, because we had this technology available that we could put to use relatively quickly and effectively to deal with other things which consumers want to inquire about. Chatbots will never completely replace humans for a lot of activity, but they're certainly becoming better, more useful, and have a really great role to play for all our digital processes.
Thanks, Larissa. That's a really interesting one, and interesting to hear that in the context of the environment we're all in at the moment. And I'll pick up from that and come back to you, Larissa. So thank you for those examples, which were sort of general in nature. I just wanted to probably dig a little bit more deeply into any other example, but it could be the chatbot one again, which is, okay, in your business, more recently, has there been a problem, a pain point in relation to the operations, risk management, compliance practices for which you've really dug deep into looking to a regtech solution to try to assist the business, and whether you could just briefly unpack any case study like that?
Well, I was actually going to talk more broadly about a very successful use of regtech, not just in our business, but in the industry more generally.
Sure.
And which is foundational, absolutely foundational for all our online processes and digital processes. And that's the automated KYC, the verification processes. Most of us who operate digitally will have those in place already. And without those, we absolutely could not provide a digital solution for applications for our customers. But the journey to get here has actually been quite fraught. And I was closely involved in developing some of these technologies in the past. And I think we're going to have sort of similar challenges as we go into our open banking environment and we start to access other sorts of data and use other sorts of data for input into our algorithms and our other lending processes. And those were challenges such as customers not putting in the correct information to start with, or making errors, matching rates, and whether what customers put in and what's matched and what's available there is actually able to be matched. The lack of availability of data, so thin data in some places, so where customers don't have, for example, looking forward, a good transactional record, where they don't transact digitally, for example, customers who have thin data in their credit portfolios. Those sort of challenges that we dealt with when developing those AML solutions, I think are going to spring up as we go into our open banking environment and start looking at consuming data and using some of the aggregation tools that are becoming available.
Okay, thank you. So great to hear about the KYC, which is ever present as an issue, and progress on that. And as you're foreshadowed, I suppose, challenges around making best use of open banking data, which we might come back to later on. So thanks, Larissa. I wondered whether, David, you wanted to also add an example that you might want to refer to?
Oh, look, I think the VOI space, stroke AML, is a really interesting one. From a broker perspective, I think around over 50% of customers are now using mortgage brokers, yet many of those customers, from an identification process, particularly in the case of larger institutions, being identified 2-3 times, having to attend branches to get identified, where in reality, ironically, the physical process probably presents more risk than doing it digitally. So really there should be a move, I believe, towards those digital solutions more broadly to facilitate verifying the ID. We know the technology is there. Look, from a data set perspective, it's simply a case of using those available from state government bodies and using public data with machine learning. You can really nail that piece, achieve increased security, but at the same time drive an increased customer experience. So my question wouldn't be why would you do it? It'd be why wouldn't you?
Okay, so that underscores the ongoing story on KYC and digital reliance on digital systems for that purpose still as a process to go. But Jo, was there an example you wanted to give?
Sure. So in terms of using regtech to reduce pain points, probably 2 examples, Mark. So first of all, using intelligence at the start of an application process to really improve our ability to segment our customers and identify customers who might be potentially vulnerable. So rather than having a sledgehammer approach, actually, the regtech solutions that are around actually will help us to really fine tune and get to that segment of one type concept, but do it for the power of good. I think the other, probably very commonly used area is electronic proof of income. Having said that, I think there is no silver bullet and there's no one solution that actually fits all customer, situations. So, we have built a POI engine, if you like, so that we can plug in various providers at the back end to hopefully make it a great experience for our customers, but be able to provide, more traditional tools, some regtech tools such as the Verifier solution we're plugged into, and then some other, tools, not necessarily provided by regtech, but, there's some great OCR tools available around that are broadly used across many regulated industries such as healthcare and so forth, and they have equal use in financial services.
Thanks, Jo. So it was good to hear a little bit of underscoring of what we heard earlier on in the day, a little bit about the behavioural side and contributions there, as well as the challenge around income and the opportunities around income. So thanks for that. Now, Daniel, I think you're back on board. Can we just check?
Yeah, hopefully I'm back.
Oh, yeah. Thumbs up for that, Daniel.
Well,
Great to have you on board.
Yeah, I'm down in Melbourne, so this is the only way I can talk to people. So I'm glad it's working.
Okay. Well, our thoughts are with you and all in Melbourne at this time, but it's great to have you back on board, Daniel. And how about I just roll those two questions together for you? Did you want to point to a case study through the use of technology?
Yeah, look, a couple of trends I guess I'm seeing, Mark, is just that the ubiquity of technology and the consumer experience really driving decisions. So we've seen this buy now, pay later explosion really in the last couple of years, where credit cards were so dominant in that sort of short-term, day-to-day consumer lending, whereas that's really been shifted towards buy now, pay later, I think because of the customer experience that it drives. And then on the regtech side, I guess my perspective on that is that every lender is using regtech to make lending decisions. And what we're talking about here is just the increasing sophistication of those tools and being able to leverage artificial intelligence, particularly, and other tools to automate a greater portion of that lending decision and to overtake some of that human element.
Can I just test that, Daniel, a little bit? So are you envisaging either, whether it's present now or in the near future, that a greater part of conduct decisions, such as lending, may well be just automated?
Yeah, look, I think as we've seen with each of the demonstrations today, there's a role, no doubt, for assessment by a person to look at the details. But there might be certain categories of lending decision that are fully automated, or decisions that are automated in the first instance with some sort of final layer of review by a human. But I think that's the direction we're heading. As compliance expectations go up, there's competition is still happening, margins are being squeezed. So something needs to give in terms of how do we solve these challenges more efficiently, more effectively. I think technology is a part of that.
Can I ask any of the other panelists just to pick up on that supplementary, if they had an observation about automated decisions? It may be, that's a big part of your business already, but any thoughts on that? Or has Daniel expressed it adequately?
Well, I think it comes down to the expectations of consumers. And they expect, they're on their phones all of the time. They expect a beautiful experience. They expect not to be inconvenienced by accessing credit. They do understand that they have to provide some information, but you know, the expectations of consumers are lifting by the day. So
Okay.
we also need to meet those expectations too.
I'd agree with Joe there. I think we're all seeing that consumer preference, which is in fact driving the automated decision making and the greater automation. Consumers possibly will still want to meet with a broker for a mortgage, but for some types of lending, like a relatively small personal loan, a credit card, or that kind of unsecured lending, their expectation is that 58 minutes that was mentioned earlier by Phil Hughes, that is their expectation. You know, in terms of automated decision making, certainly new entrants to the market, the neobanks, etc., who are building new systems, are fully designing those systems in those ways. For those of us who've been in the market longer and have legacy systems, etc., that we need to build on top of, that's a little more challenging. But certainly that's where new entrants to the market will be driving the industry, and that's where consumers want to go. So I think it's inevitable for the majority of lending, other than perhaps, you know, vulnerable consumer type situations that require specific review, potentially home loans or other very large loans that are more sensitive or higher risk to consumers.
Thanks, Larissa. I think, David? Yep.
Yeah, I think to add to that, I think it's, I kind of like the term digitally assisted mortgages or digitally enabled mortgages, because I think there's absolutely no reason that you can't still have you know, those fast responses by going via a mortgage broker. But as you go through actually entering that information and asking the right questions of consumer, particularly to Larissa's point around consumers that for whatever reason may need more education or may be at more risk, the mortgage broker, as an example, can help them through that application process. But once they do that, and we see this with the neobanks who are actually partnering with mortgage brokers, is that you can still get an immediate response. And in fact, it can be even quicker because the mortgage broker is obviously educating in those questions and making sure that the consumer knows all of the information that they need to provide up front. And I think that's why you're actually seeing probably faster turnaround times with neobanks that are using mortgage brokers, and that's why there's that motivation for them to partner with brokers.
Okay, thank you. That's all really interesting, because we had a question around community expectations, and I might just supplement it now since we've touched on it and come back to you, Daniel. You know, the question was sort of directed towards how might businesses meet community expectations, but it was sort of bearing in mind such things as, I want it to be digital, I want it to be fast, I want it to be efficient, I want the right answer as far as I'm concerned, but at the same time, I want you to protect my data, can meet privacy, you know, all those sort of expectations as well. So Daniel, and I'll come back to the others as well, maybe the flip side, meeting those expectations. So there's this drive about the customer experience and efficiency, but are there any things we need to be really mindful of if you just wanted to pick one sort of thing that in all that, let's not forget this?
Yeah, sure. Well, I guess, I mean, what we saw, even the Royal Commission, you know, focused on what are community expectations of financial services companies around compliance issues. And I think the Royal Commission highlighted was there was a mismatch between expectations of compliance within industry players and then the community at large. And so I was saying before, you know, that means expectations are rising for compliance. We talked before in the demonstrations about the need for lenders to do their not unsuitable assessment to work out when a loan's not unsuitable, and that involves making reasonable inquiries. This concept of what is reasonable inquiries, I think that's something that moves and shifts with community expectations. And so it's not frozen in time. What's expected of a lender when they're making a credit assessment, I think, needs to move and shift. And as regtech tools become more and more sophisticated, more powerful, I think they'll be able to make better quality lending decisions than a manual process. And so I think the outcome of that can be that the expectations on lenders will be, you've got to use the best regtech tools that are available to get to the best quality decisions. And I think we might see the same as mortgage brokers start to have this obligation to comply with a best interest duty, to fulfill that duty, how can they do that if they're not deploying the best available tools? So I think as much as we talk about consumer preferences and their desires about the good user experience, the flip side is the expectations of the community about compliance issues is also growing.
So the forces align in some respect to double down on technology for all purposes. Did any of the other panelists want to supplement that with anything they thought, look, in all of that force, is there something that, let's not forget this, we need to be mindful of this?
I'm happy to jump
David,
in. Mark.
Yep.
I think at its essence, compliance, I think consumers aren't necessarily fascinated by compliance. They're fascinated by getting the right outcome. And I think the Royal Commission, what that hopefully it's taught everybody and should do is, it's that Martin Luther King quote, the time's always right to do what is right. And I think that's why I love principle-based legislation, because it's not necessarily just about how you do it, but it's why you're doing it. And I think compliance now has to become a strategic function. It can't just be, we just need to tick these boxes. Actually, it's about how do we enhance the customer experience, drive the right customer outcome, and work in collaboration with the rest of the business to drive that. And I think that should be one of the biggest learnings from the Royal Commission. And I believe that is the case, by the way. I think, to Daniel's point, I think mortgage brokers are starting to think, as an example, how can we embrace technology to ensure that A, we're driving a better customer outcome, but B, we're also proving that in a compliant manner.
Thanks, David. Joe, Larissa, anything you wanted to add? You can. That's fine. You don't have to. Okay, that's great. So, great. Go ahead, Larissa. Sorry.
I will add something. Sorry. One of the growing expectations of consumers and of businesses when, as we move more and more into the use of technology and the use of data, is obviously data security. And I think that's going to be fundamental. And I'm sure we're all investing quite significant amounts of money and time in ensuring data security. But without that, consumers will not be comfortable to use these technologies. Even now in some of the more developed markets that have had things like open banking for a long time, like the US, the consent rate is still relatively low. I think they have around 25% consent rate in their market. So, it's a lot of investment into technologies that consumers don't feel comfortable in using. So I think that's going to be fundamental. And the other fundamental thing, also in the context of COVID, is we've had a lot of consumers sort of catapulted into the digital economy at an unprecedented rate, where they may not be familiar with some of the technologies and some of the uses and some of the dangers as well. So educating people in the community, educating our staff as well, and educating our consumers to avoid the potential scams and other things that we're seeing increasingly in this COVID environment is going to be really important for us to maintain the trust in the technology and ensure that consumers are actually use it in the way envisaged and in line with our investment.
Thanks, Larissa. There's some really good thoughts there. Joe, did you want to add anything to those?
I think everybody has covered it pretty well there, Mark.
Okay, thank you, Joe. So I will come back to you, Joe, and I've got my AirPods out at the moment because they've run out of power during this session. So I'm trying to quickly charge them up, but I can see you can still hear me. Joe, let's now think about the business inside. So making use of technology for both the customer-facing side, but importantly, the regtech side of it, the cultural element of that. Did you want to make any observations? What works well for changing culture around making use of these technologies?
Great question. I think sometimes when you think of risk management and technology, the two terms don't naturally coexist. This webinar is a great showcase of actually how it does coexist. But actually within organisations, probably some parts of organisations like technology or the data teams or even the business might not think that innovation can take place inside of risk. So I think it's really important that, as risk professionals, we learn to showcase, the innovation that is taking place inside of our functions, demonstrate, one, the technology, the benefits to the customer, the benefits to the business. So I think storytelling is a really powerful tools of that. One of the big cultural changes that I've found, particularly in the last 12 months, piloting some of those proof of concepts that I mentioned earlier, that takes a cross-functional team to bring that to life. So we have data engineers and architects, we have risk professionals, all coexisting in squads, and all playing their expert role to bring, a concept to life. So, that introduces a whole lot of agile concepts like home teams and mission teams and operating rhythms around sprints and pace and showcases and so forth. We've actually adopted some of the tools from those learnings now. So we have Jira boards inside of the compliance team and the op risk team and the credit risk team. And it's a great visual tool actually to see just what's going on inside of our function. So that's been pretty cool. And the final thing I'll just say is just around the partnership required with the technology part of the organisation. I think Sean mentioned it in his opening remarks around how, you embed compliance early. We refer to that as compliance by design. And so that requires, the builders, the tech builders, to be thinking that way. And you have to work really closely with those partners, tech partners, to be able to bring that to life. And I think the other part with working with technology is this space is moving really quickly. Expectations are rising really quickly. And I think gone are the days of big bang technology projects, and we need that optionality to be able to kind of plug and play to the best possible solutions. And that, that's how we can help as participants. We can help the regtech industry as well to thrive by being able to kind of swap out for the best possible technology that's going to give business, compliance and customer outcomes.
Thanks, Joe. So what I love about all of what you're saying is it sounds all very exciting. So, people just need to get on board and sort of say, well, culturally it's fantastic because it's the way of life. It's exciting. Be part of it.
It's probably the hardest part, Mark. Yeah. Actually, to win the hearts and minds and actually prove that it's possible, is probably the hardest part. So I am kind of painting a rosy picture, but that's what's possible, I suppose, if you can get those elements together.
Indeed, Joe, you're right, because I know firsthand a lot of it is also nitty-gritty, difficult work. So you need people energized to say, this is all for a good purpose. So thanks, Joe. Did any of the other panelists want to supplement Joe's comments?
I might just add, we worked with a bank who was rolling out a regtech solution, and there was significant sort of pushback initially from elements of the existing sort of risk management function. And just an observation that came to us through the project was that often a hybrid solution is the best sort of first step, where leveraging regtech to do that pre-vetting or pre-analysis with still that human involvement, because what that does as well is it gives the regtech tool an opportunity and a chance to validate the output, to prove that it's working, and to bring along that cultural change as well.
Yep. So the baby steps, the moving along, going to those case studies. Alrighty, so thank you for that on the cultural side. I'm going to weave two questions together about alternative data sets and what role they play in the future. And what I want to weave into that is obviously the consumer data right information as well. So could I ask, and I'm probably going to go with you first, David, just to sort of reflect on the power and use of alternative data sets, and if you could just bear in mind the consumer data right information. Now, earlier on, Larissa noted some of the limitations and some of the challenges with that. So by all means, underscore that or give your own perspective on that. So over to you, David.
Cool, awesome. So look, I think in terms of alternative data sets and both CDR, I think CDR, firstly, we need to be able to educate the public. I think a lesson from the UK was that after 2 years, quite phenomenally, 95% of the general public still didn't know what it was. And I think when we work within the fin services environment, we kind of forget that. There's just this expectation that people will know what we're talking about. And an extension to that is probably that once we start to educate them on what it is, how do you then start to ensure that the customer is aware, the consumer is aware that they have a clear choice on who and where their data goes to and for what purpose? And obviously the data security and the transparency is going to play a critical role in that being successful. I think an extension to that, when we then start to talk about data sets, and one, that I think that definitely we're passionate about at Loan Market is, i.e. risk-based pricing. So as an example, if you start to look at, probably even if you go back 20, 30 years ago, the way that we have priced loans in general, but mortgages more broadly, has really not changed. Even with all these additional credit checks, the more questions, the abundance of data, if you actually go and have a look, there's really little connection between the rate on our home loans and our risk profile. So i.e., there tends to be this average rate that everybody pays regardless of how well you manage your financial position. Now, look, I think we see this at its worst, where long-term customers are actually paying what they deem, the loyalty tax, where new customers are coming in and getting even better rates. Now, I think that whether it's data sets, open banking should really help change that. It should, as should the rise in fintechs. I think the mortgage broking industry has actually played a fantastic role in helping change that somewhat also. But how do we start to use broader data sets also to support with that, i.e. utility bills, rental history? And the extension to that is not just changing risk-based pricing. How do we then use things like rental history as an example to open the door to consumers who potentially otherwise wouldn't have access to credit? So, that they've got maybe 1-2% deposit in a world where the average house price in Sydney is way over $1 million. Using that data would actually facilitate larger loan amounts, but in recognition that these consumers are younger, they've got strong behaviours, and they've also got a strong outlook in terms of their future wage growth. So I think those data sets will play a huge role, and hopefully CDR will see that be really driven.
Thank you, David. The power of contributions from other data sets. Did any of the other panelists want to make observations on that question? Alternative data sets?
I'd observe just, one of the earlier presenters this morning spoke about consumers who are self-employed or otherwise don't have reliable information available about them. And I think alternative data sets are very important for those type of consumers. And not only the self-employed, but increasingly we have consumers who are functioning within the gig economy. They don't have the sort of, payslip type information that is clearly demonstrates their income, etc. And we see more and more of those sort of consumers. I think for those consumers, we will have to look at alternative data. And one of the interesting things about CDR is beyond open banking, it's going to be extended to superannuation, and thereafter to electricity providers, and potentially thereafter to mobile phone and other telecommunications. And the use of CDR in those type of industries can facilitate better lending decisions for lenders as well, as that data can be quite reliable and indicative. So including things like, superannuation data can really help us with income verification, and some of the other data is quite predictive and quite useful for those consumers who are new to the market, for example.
Thanks, Larissa, because that points to the future of available data sets and how it can be weaved in to decision making. Okay, so I think we'll go for a few more minutes just on questions. So I did want to ask this question about impediments and regulatory impediments, since here we are as a regulator. you don't have to point the finger at us, but nevertheless you can. But I suppose I just wanted to ask, do you think there are some impediments? They could be business, but impediments, which could include regulatory, something that you wanted to call out to the potential of, better use of regtech and technology for producing better outcomes. And I was going to start with you, Joe, I think, on this one.
I think, as we've seen today, and just the pace of the technology and the tools that are available, the art of the regulation is that it can embrace, the future direction of where technology and consumer demands are taking, while also achieving the objectives that the regulation's in there in the first place. So, if you cast your mind back to, when some of the regulation that's been in place for kind of 10 years or so now, it would have been much more of a face-to-face proposition, would have been, more prevalent than what it is today. And so how do you as the regulator make sure that you're getting the objectives and outcomes that you need, while also embracing, new technologies and tools and so forth? So I think that's really the opportunity for regulators to think a little bit differently about how they achieve their objectives, and also not apply, some great examples around small business, consumer lending and mortgage lending. There's different levels of complexity across the board there. And so applying, different tools and techniques, depending on that complexity, is also important, I think.
Okay, so thank you for that. And so I pick up the theme of sort of modernisation and, digital frameworks and open-mindedness as some of the things that you would be highlighting. Daniel, did you want to, there you are as the lawyer advising people. Did you want to say there's something in the regulatory space?
Yeah, sure. Thanks, Mark. I think one of the challenges for regtech is that the regtech tools can be somewhat of a black box. So you put in the data and outcomes and answer on, let's say it's a lending decision. There's the challenge, I think, for implementing a new regtech solution is validating that. I guess it's not that different from any other sort of system that a large institution puts into place. Whenever you're putting any system in, you've got to show that it does what it's supposed to do and delivers an outcome. And I think regtech's no different. There needs to be a process of testing and validation to see that, yes, this is doing what it should do. I suppose the flip side of the black box challenge is an opportunity, which is, you're talking before about, utilising other data sets. One of the great opportunities in particularly artificial intelligence when it's driving regtech is that you don't need to decide in advance, you don't need to know in advance how additional data sets might be useful. Train the model on all the data that's available. The AI will process that data, learn from it, and help you make lending decisions going forward. You don't need to decide in advance what's useful. I think that's one of the powers of regtech tools, but also, there's the challenge aspect of that, of making sure it's operating as intended.
Yeah, okay, Daniel, there's some interesting thoughts, because, the traditional model is be transparent, be able to explain how things are done. And that's going to be challenged, I suppose, by the powers and capabilities of technology. And so I think that's going to be a challenge probably internally for risk compliance, as well as regulators, to the degree that we can accommodate or accept that. So maybe what are the rules around that? So that's an interesting thought for the future. I know it's here as well. So David or Larissa, anything else you wanted to highlight by way of a barrier? Cool. That's okay. That's okay. Larissa, sorry. Yep, you've done. Yep, go ahead.
No, not specifically to regtech in responsible lending, but just a note that regulation will always move more slowly than the technology, and it'll always be in catch-up mode. I do think it's important for our legislators to pause and review some of our more, perhaps now starting to look like arcane regulations, and have some process to think about whether we still need them. So, for example, do we still need to send all our borrowers every 6 months a statement where they are digitally engaged and they can see at any point in time the details of their account, live, up to date, etc.? Is there really any value in providing those statements to those consumers? So there are still those kind of requirements in the legislation that now no longer seem very relevant, but are quite expensive to continue to comply with. And we do need to have some processes to be able to review those in a more timely way as technology evolves and as consumers adopt new technologies.
Okay, thank you. And so maybe I'll just leave with one last question, and that is, let's look forward 5 years. What do you think might be one thing that's different in the way that all the businesses are operating there, making use of technology as part, I suppose, as their practices, risk management and compliance? So is there something you'd like to highlight? Maybe I'll go to you first, David.
Oh, look, I think obviously working within the mortgage space, the clients that we're dealing with will change over that time. And I think what you'll see, and we're already seeing this anyway, is that your clients are going to be far more comfortable using digital tools. And the more that they use that, I think there'll be a demand for all of the players within the industry to actually embrace those and use those. I think, and again, probably the larger institutions where it's harder to make change happen as their customer demographic changes, particularly around mortgages. I think you'll just see that they will have to speed up their ability to change and expedite that. So I think you'll start to see that they embrace that more. And I think ironically that's already happening through COVID. So I think that there has been a lot of innovation and a need to speed up because of COVID. We've spoken about the VOI process earlier. From a reg perspective, ARNEC have actually changed to allow that to happen via video. Lenders have also, my hope would be that on the back of this, we don't see that go back to the way it was, and that we continue to embrace technology, particularly when it is, go back to what I said earlier, when it is the right thing to do by both the institution and the consumer. There's absolutely no reason that we should go back to those previous ways of doing things.
Okay, so a multi-channel, adaptable, a flexible engagement with consumers. Did anyone else want to look ahead 5 years and point out anything they think could well be different? I know, I'm not suggesting you should be an economic forecaster, but Larissa, did you want to highlight something?
I'm hoping we will have end-to-end online processing available for a lot of our lending products. And I'm hoping that regtech will assist us to create customizable journeys for our consumers so that we can identify those consumers who need more inquiries, who have those risk factors or potential vulnerabilities, and have a different journey for those. And the systems can help guide consumers into those simple, straight-through journeys to more complex journeys, to journeys that require additional data sets to be used, or that in some situations may require a human underwriter. So having those more bespoke sort of customer approach as possible through the use of technology.
Okay, thank you. They're good thoughts. Joe, I can see you may have something you want to add.
Oh, I think 100% agree with what Larissa just said in terms of customizing, situations or solutions for customers when you're dealing at scale. Obviously, machine learning and AI and natural language processing are relatively nascent right now. The regtech industry will help that become much more pervasive and integrated throughout the end-to-end process, not only for application but in life management, and potentially also to collect and end of kind of loan life activities as well. I'm also imagining that obviously consumers have, they own their own data, and, there could be a place where they have a wallet with all of their data, and they can use that to to actually engineer good outcomes for themselves, maybe financial outcomes, such as I will give you more data if you give me a cheaper price. So that there could be the consumer could be in the driving seat a lot more, which would be a really exciting and interesting place for the industry to go. And I think this, you can't speak at a reg and kind of risk type conference to say that also I think it can help us as risk professionals as well in how we automate and industrialise the controls that are in place to make sure that things are being done in the right way, compliant with regulations and also not causing customer harm. So really automating those controls and removing kind of the manual components of that, I think will become a lot more pervasive in 5 years' time.
Yep. Thank you, Jo. Daniel, was there anything you wanted to add?
Yeah, sure. I think I certainly agree with what's been said. I guess I see the potential for combining the CDR reforms and the regtech tools we've been talking about, so that in the context of someone looking for a home loan or a personal loan, to be able to leverage their transaction data and other data to help them identify the best product, find the best product, and then to use that same data to help them make an application and have that application processed quickly. So, regtech technology, being able to help solve the regulatory challenges, but also help drive, product decisions and consumer outcomes as well.
Thank you very much. So, I think all of you have generally answered a good number of the questions that have come in that I could quickly just see now. I mean, there is a question around the expense side. I don't know whether anyone wanted to provide a perspective about where things are heading and what capabilities there are around the expense side, or is it similar in theme to what we've already said? Any supplement on expenses? No. Daniel. Yep.
Well, I guess you're referring to the benchmarks around household expenditure, Mark.
Well, that's weaved in the question. I can't probably interpret it fully. That is mentioned in there, but against the context that the world has sort of been shaken a little bit around what can be and cannot be done around expenses, and I won't go into the niceties of that, but I suppose the query is just around the making use of the technologies and the opportunities around expenses.
Well, I think the beauty of using transaction data, actual transaction data, is that the need to rely on benchmarks is reduced. And so you can get much more accurate, individualized assessments without relying on benchmarks by accessing actual transaction data and processing it.
Okay.
I think that's where I see it's heading.
That's fine. I think then another theme is a little bit about the consumer side again, which you touched around consumer expectations. And it came up in the earlier bits, a few questions asking around how to ensure that consumers aren't excluded. So, you've mentioned education, the opportunities that will be there for some consumers, digitally brought into the system where they may not have been familiar with it. So I think some concerns around, notwithstanding those forces, whether they will still be in a material number of consumers somewhat excluded from access to the system. And in addition to that, I think to the degree that the use of the technologies, could they in fact be prejudiced against in the what's offered and the pricing going forward and so on. So did anyone want to just comment on that thread? I can see Dave here.
I think, Mark, I spoke about risk-based pricing.
Yep.
There are very much two sides to that, and that requires, I think, really strong legislation to ensure that we don't close the doors, obviously, on people that potentially become less attractive to lenders. Now, ironically, when in the US they moved towards more of a risk price model, it actually saw more people access the funds, but also saw the average rates dropping. So I think it is possible if you have really strong guidance and regulations around that, but it's absolutely critical because without that, I think you will see a world where potentially there is either declining access to funds for those less attractive, or potentially they're just paying significant higher amounts, and you start to get potentially like mortgage prisoners that we're seeing in some other countries.
Interesting. I mean, I'll just observe, I mean, I'm on a call later today with the Monetary Authority of Singapore as they're looking at various aspects around artificial intelligence and regulation and coding there. So I suppose I'll pick up a theme and I'll just ask this question. So will there be an inevitability for leaning in by regulators or government on the boundary lines and the good practices around the use of machine learning and AI? Is that something industry expects? And is it just an inevitability that'll happen? Any thoughts on that?
Just something that was in early rollout. One of the banks in the UK developed an early sort of regtech tool to help them with making lending decisions, and they discovered sort of shortly after the rollout that it was making discriminatory lending decisions, and so they identified it quickly and were able to rectify it. But I certainly see there being a need for, continued oversight of what this regtech tool is doing to make sure it's operating as intended, and for industry and regulators as well to be more and more comfortable with interrogating the systems.
Thanks, Daniel. Joe, I can see.
I was just going to add, Mark, that one of the criteria, because machine learning is a bit of a black box, it's not well understood, and so having model explainability as a feature of the tool that you're using, I think, is pretty important. I have to, hand on heart, be able to explain to my board, to my boss and my peers and the customers, and to you as the regulator, that I can explain how we've kind of come up with the predictive tools that we've come up with. So I think that's a pretty important mitigant to that risk.
Okay, thank you. So I think I want to just end it there and thank you very much for your time, your observations, and opening up about some of the things you're dealing with and where you see opportunities and potential ahead. It's been fantastic, and I appreciate your time and the comments that you've made. So a big thanks to all of you. Thank you. And it is a bit funny in this environment. I can't hear the applause, I can't see it, and move on to the next thing, but it is great. I will now close up. I think we're up to the closing, and just wanted to remind people of a few things. So today, I think we've really just wanted to illustrate and paint a picture of the powers of these technologies in the case study of lending, for good practices, risk management and compliance. And we've had a powerful set of demonstrators show opportunities and reflections on those. And then we've had a terrific panel session where people are actually talking about what's going on, what are they dealing with, how are they changing, and what's the future looking like. So I personally, I think it's been a very rewarding and terrific session all day, and I want to thank all the presenters, the demonstrators, for their efforts today. I also want to thank my ASIC colleagues. They've been in many teams working for months on this, the production of the synthetic data sets, identification of the problem, engaging with demonstrators and panelists. It's been a long exercise, but I think it's hats off to you for the legacy we have today, with all this being recorded and the information being available for people to absorb when they can. So thank you to you. And that probably links to really just the closing, which is, I want to remind you that I think a survey may well be sent out to you. We would welcome responses to that. I want to remind you that the materials that have been presented today will be available. The recording of today will be available, because we wish to leave that legacy for people to continue to reflect on in the near term. And so just continue to watch out what ASIC might do in and around regtech with our regulatory colleagues. There will be ample opportunities around topics for further conversation. And so we will update you about that. And we have a quarterly regtech liaison forum, and it has a big population of people attend. So if you're interested, just sign up. And it's an opportunity. We work with other agencies and with industry to talk about regtech, where it's at, and where the opportunities lie. So I commend that to you. So I think with that, we finish the day. And so all the best to you for your rest of your day, wherever you are. And if you're overseas and you're heading to bed, have a good night's sleep. Thank you all. Bye all.